Everything you're about to hear is for education and entertainment purposes only. Whilst we are licensed, we're not aware of your personal financial circumstances. Any advice is general advice. Equity Mates operates under Australian Financial Services Licence 540697.
Equity Mates!
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast where we explore what's possible in the world of investing. If you've just joined us for the very first time, a huge welcome to the Equity Mates community. We have a massive episode for you today. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. Very excited for this episode. There's a lot happening in markets. We're going to break it all down in our news segment. But that's not all we're doing. We are back with another episode of Pimp, My Portfolio.
Yep.
Matt Ingram from Northhaven is joining us to review the portfolio of an Equity Mates listener. And we're bringing back a segment that I always enjoy. You know that my brain is slowly rotting from the social media algorithm.
Yes.
You know, I see a lot of terrible investing advice and business advice on TikTok and on Instagram. And in our not financial advice segment, I'll be showing Bryce some absolute shockers.
Because I don't see any.
News and markets.
We've got three stories that we're going to cover this morning in our news and views. We're going to have a look at the mysterious US collapse. Tesla's profit is down 71%, and an update on the latest nuclear costings, because by golly gosh, they have come in and they are big. But let's start with the mysterious US collapse, Ren, because there's been a lot of chit chat about how weird the bond market is playing out at the moment.
Yeah, and I think we're here to say we don't think it's that weird.
No.
Yeah. Citi called it they spoke about a mysterious rise in treasury yields, which we actually don't think is that mysterious. So we just want to talk about it briefly. But to take a step back, what's happening?
Yeah.
Well, everything in the US is falling.
Yeah.
So obviously people have been tracking the Trump's Liberation Day, the tariffs, the retaliatory tariffs. To give you a sense of what's happened, so the S&P 500, the US stock market index, is down about 5% from when Trump announced the tariffs.
Which is crazy when you think about the chaos that has been the last few weeks.
I know, 5%.
Yeah.
Honestly, like some of the, we've spoken about this before, but like some of the headlines, bloodbath, worse is yet to come, economic nuclear winter.
I know.
The S&P 500 is down 5%. It's up in the past 12 months.
Yeah.
Let's just keep that in mind. But the S&P 500 is down. The US dollar is also down. The US dollar index, which tracks the US dollar against a basket of currencies, on Liberation Day was at 104. Now it's at 99.5, so it's down about 4%. But the reason that US investors are talking about this mysterious thing is when stocks are down, normally what happens is investors fly to safety.
Yeah.
Then they fly to US government bonds.
Yeah.
And so when the price of bonds go up, the yield on those bonds, expressed as a percentage, goes down. And that's sort of
how it usually
normal
plays
market
out.
function.
Yes.
But in this case, bond yields have gone up, i.e. the price of bonds have fallen as well. So the US stock market has fallen, US bonds have fallen, and the US dollar has fallen. And that was why people were saying it was mysterious. But we're here to say it's not that mysterious.
Well, no, when you consider what's going on, which is effectively everyone withdrawing from the US, then it's not surprising.
Yeah. So what normally happens is investors move between different US assets because all these US investors are way too insular. But
it's as if they've just discovered what's available elsewhere.
Well, no, it's like globally everyone was investing in the US. Global capital flights were heading towards the US. But global capital flights are now leaving the US.
Yeah.
The flight to safety is happening. Gold is running up. Bitcoin is running up. But people just don't want to hold US assets as much.
No.
And it's all on the margins. Like obviously US treasuries are still incredibly safe. So gold is flying up. Bitcoin is flying up.
Australian housing is flying, Ren. It is. It actually is.
Is it
unfortunately? Actually? Yeah. It's back.
Oh my God. Never left.
Yeah, I think the quarterly figures coming out are pretty warm again.
Wow.
which is worrying. Yeah.
Jeez.
So much so that Chris, our mortgage broker, emailed directly and said, "Should I come on the show to talk about the new housing boom?"
Oh my God.
And I said, "Housing boom." I said, "Why don't we just wait for the election so we know what policies we're dealing with?"
Well, either way, both sides have policies that will pump those prices up.
I know.
So we should. That's a good natural plug to say. We actually interviewed both housing ministers in an episode that we released at the back end of last week. So it's available wherever you're watching or listening to this. Yes. Michael Sukkar and Claire O'Neill talking about Australian housing and their proposed policies for the next 3 years. So go and listen to that.
Yeah.
But Bryce, to close out the mysterious US collapse, I guess our point is it's not that mysterious.
Yeah.
The bond market topples presidents, I think, and prime ministers. Liz Truss over in the UK famously didn't last as long as a potato.
Yeah.
Do you remember that?
Yeah.
But yeah, the bond market freaked out at some of her policies and she was removed. The US has to refinance, I think, about $3.5 trillion worth of debt this year. It's coming due. And so there was this whole theory that Trump was trying to tank the market now to tank treasury yields.
Yeah.
But yields going up is not good for them.
Yeah.
It's also not good that he's asking Jerome Powell to cut and saying he's going to fire him, but that's a whole other conversation. But I guess we want to leave this by just saying the main story will be in US Treasury yields, not in the US stock market. So if you're trying to get a sense of where the market is, what the temperature is, what might happen next, how much the White House will be freaking out, the angry calls Scott Bessent will be getting from his Wall Street friends.
Yes.
Watch the 10-year
also
Treasury
Trump.
yield.
I read somewhere that Trump has almost up to $500 million invested in bonds personally. So he'd be a bit squeamish.
True. I mean, where doesn't Trump have money invested?
I know.
Anyway, let's move on and let's talk. We are in earnings season.
We are.
There's one company that caught our eye.
Always catching our eye, Ren, and that is Tesla. No surprises. So Tesla reported a disappointing set of Q1 results. Vehicle deliveries were down 13%, revenue was down 9%, and profit was down a whopping 71%.
So what? Shares fell down, profit down 71%. Market is efficient and responds to information as it's shared. What? Shares were down 30%?
No, Ren. Shares jumped 5% in after-hours trading. This is just, though, a signal of how desperate, I think, how desperate they are, shareholders are, to cling to good news when it comes to Tesla.
Wow.
Shares jumped 5%.
Not pulling your punches there.
No, they jumped 5% after Tesla reported, because their energy storage business was had revenue up 67%, and the company reported a mass production of cybercab robo-taxis was going to start in 2026.
Okay, well,
so the core function of their business is suffering.
Okay, so that's
and I should say as well that the speculation around not speculation, but Musk himself has also come out to say that he's going to now focus a little bit more on the company or running Tesla and wind back his time spent on Doge to 2 days a week, because obviously shareholders will probably be looking at him being like, mate, come back and actually run the companies properly.
Yeah. So I think the steelman version of the Tesla shareholder argument, like taking their argument at their best, is Tesla is diversifying its revenue with energy storage. I'm not saying I agree, but this is the robo-taxis is still the name of the game. Everything else is just noise. Whoever wins robo-taxis will win. Yeah. And Elon leaving Doge and coming back to Focus is important.
Yes.
And they'll probably also say a lot of bad news is already baked into the price. So that's their argument about why shares rose 5%. Your argument is that there's a lot of just hopium out there.
It's hope. Their core business is suffering.
Anyway, this is going to be a classic example of like time will tell, and there will be a bucket of people that were very right and a bucket of people that were very wrong.
And it'll be fascinating to see BYD earnings.
Yeah, well, they reported recently and they looked good.
Yeah.
Well, in our Equity Mates daily email,
nice
organic plug, about a week ago, I shared their 2024 numbers because they reported those recently. For the first time ever, they topped $100 billion in revenue, which was actually slightly higher than Tesla's 2024 revenue. BYD's net profit was up 34% year on year, but it's been a story of two different shares. BYD's shares were up 37% in the first few months of the year, while Tesla was down about 27%.
How much damage has Musk really done here to his image and the image of Tesla? Like, it's going to take, because there's no doubt what is going on is that a lot of people are voting with their wallet here. And it's like, genuinely, how long is it going to take for people to come back into Tesla?
So I listened to this really interesting interview on Ezra Klein's podcast with Thomas Friedman. He was speaking about China, but basically how wrong people are getting China. And he was talking about how for the first, there's this narrative that China can't innovate.
In the positive or the negative?
He was basically like, we're screwed. Like,
Yeah,
we
right.
as the West are screwed. We're playing this wrong.
Right.
And there's this narrative that China can't innovate, that they only steal ideas and that they're always playing catch up and that the innovation comes out of the West. And he was talking about how he visited a whole bunch of EV factories, and EVs is one example where China is now ahead.
Leading, yeah.
And cutting off China from the rest of the global market is going to hurt the rest of the world because, for years the technology transfer has gone one way. Like America's had the technology and China has needed access to technology to build things and innovate themselves. Whereas in this case, like, the West needs to have China sharing their technology and to allow the rest of the world to innovate. And like the classic examples are BYD came out with that battery, which was about doubly as effective as Tesla's supercharger. But then like a week later, CATL came out with an even better battery. And just listening to him talk about some of the innovation that's happening in the EV space, it's pretty interesting. And this is going to be one where I think it will be like a real technological clash.
Yeah. Fascinating. Well, we'll definitely be keeping an eye on Tesla, on BYD, I guess the EV market in general. As Ren said, if you want to keep up with all the news, make sure you subscribe to our daily news email. But to close out, we wanted to have a look at the latest nuclear costings, Ren, because there's been a lot of chat with the election around, sustainable energy and Australia's role in, the energy transition. And the coalition's nuclear plan costings has come out.
No. To be clear, these aren't their official costings.
Yeah,
this is
it's
just
a report.
Yes. They would not agree with these costings.
No. It's new analysis that has come out from independent public interest think tank Climate Energy Finance. And Ren, they have found that the coalition's nuclear plan would cost the Australian economy at least $4.3 trillion by 2050.
Which does pale in comparison to the numbers that the coalition have been using from Frontier Economics, which was $331 billion. When we spoke to Jim Chalmers, again, that episode is available in the feed, he had a number around $600 billion.
Yeah.
So $4.3 trillion is an order of magnitude bigger.
Massive.
But it's interesting. I mean, look, I don't know about. I personally like the idea of nuclear not with taxpayer money. I thought it was interesting in the debate last week. Anthony Albanese said if nuclear stacked up, there would be a queue of people saying, "We think this is a good idea. We're prepared to invest our own dollars." And it just made me think there is literally in the States where there isn't a ban on nuclear energy. There is literally a queue of people.
Yeah, well, I think that's
Hold on, let me just explain the queue quickly.
Sure.
Microsoft, Amazon,
Yeah.
Google, Oracle. Heard of them?
Yes. Well, I think to your point, though, to contextualize people thinking, why isn't it happening? It's because there is a ban here in Australia on nuclear energy. So I think what Albanese is saying is if they feel like there's enough demand, they might do something about that. He hasn't come out and said that. But there is a ban here that is stopping private sector like Microsoft, Amazon and the like doing the same thing here in Australia.
Well, nuclear is a topic area that we'll certainly be watching here. Certainly one of interest to the Equity Mates community. One way to keep your finger on the pulse is with the Equity Mates daily newsletter. Every weekday morning, 6 a.m, we're sharing a dot point summary of the news that you need to know. Sign up in the podcast show notes or the YouTube show description.
This is not financial advice.
We've been been scouring the internet for our not financial advice segment to find some of the worst financial advice that exists on social media. Ren, I haven't seen the videos because you're the one who spends the most time in
one of my most important jobs each week is to prepare our Friday afternoon.
Yes. Follow us on Instagram.
Post.
Yeah.
And so here are some that I've curated especially for you.
Nice.
So there's no particular theme, but I just am interested to get your reaction to them all.
Okay.
Because I pay for things with offers, everything costs the same amount. It doesn't matter if it's this watch or this phone or a brand new car or a private jet. It all costs the same amount. Now, I know that sounds crazy. I'm going to look at something I'd like to buy, and it's outside my current spending comfort zone. A car. I'm going to buy a $100,000 car. So I can look at that car, and if I make $100,000 a year, I ask the question, is this worth a year of my life? You know what I'm going to do? I'm going to create an offer. I'm going to create a $5,000 offer, and this $5,000 offer is going to create a transformation for somebody that's worth $50,000 to them. So they're going to pay me $5,000. So when I create the offer, I have to use creativity to create the offer. I gave them the offer. They paid me for it, but I still have the offer. They bought it, but I still have it, which means I can sell it to somebody else. So this one person that gave me $5,000, that doesn't preclude me from selling that same $5,000 offer to another person or another 10 people or another 100 people or another 1,000 people. So I still have the offer. I still have the creativity that I used to create the offer, and I have the money. Now I take the money and I go buy the car. I don't have the money anymore, but I have the car, the creativity, and the offer, which means I can go sell the offer again and replace the money that I no longer have because I spent it on the car.
What?
You get that?
No, I don't get that at all. I don't know. Is there something to get there?
No, he's just...
What the hell? Is he taking the piss?
It makes no sense. No, this is the thing. These people are all serious.
I don't get that. How is he serious?
Well,
it sounds like a pyramid scheme. In some way.
I don't know. He could probably sell you a course to explain it to you, though.
Yeah. It's his offer. Wow. All right. Good start.
Yeah.
Jeez.
If you're single and you want a dating life, but you're also trying to make money, bring your first dates to business stuff. I never did a first date one-on-one. I'd like, you meet a girl on Tinder, you go, hey, I got to go to this business networking thing. You want to go with me? So then you bring the girl there. You're doing your business, but you're also dating.
Not bad.
What do you reckon?
Multitasking, not bad.
Yeah.
I mean, it'd be a fast way for you to realize if your potential date's also into this stuff.
Yeah. Well,
could be very off-putting.
Yeah. I'm not sure I'd recommend it. I know sometimes, your wife Harriet gets sick of us talking about the business
ideas.
Yeah, I'm not sure she would love if she could come and sit in on a podcast recording as a first date.
Big time. No, I wouldn't be married to my wife if I did that first date.
No, you would not. All right. Wow. What more good advice?
Where are all these guys doing podcasts?
Well, I think
because they all look like they're set up for pods.
Yeah, well, there's a lot of podcasts out there.
I know, it's crazy.
People really ask the same thing about us.
Yeah, but that's true.
Yeah.
Anyway.
I also think there's a lot of fake podcasts out there.
As in, like, they set up to look like they're podcasting, but they're not. Yeah.
Let me give you a life-changing hack. What if you could think twice as fast? That would mean that you would have twice the amount of hours in the day. You see, most people ask, how do I speak so concisely? And how do I speak so fast? Well, here's the hack. Everything I listen to is at 2x speed. Everything I think about is at 2x speed. Every time I make a move, it's at 2x speed. If you'll start to 2x speed everything you're listening to, and even as small as bringing up the speed of the mouse on your computer, I absolutely guarantee you'll be able to think twice as fast, register twice as fast, receive information twice as fast. Try it out and let me know after a month what happens.
Nice.
Have you thought about
increasing the speed of your mouse? I have tried. I know what you mean, like the sensitivity of it.
That's what he meant. Yeah.
And no thanks. What? No, that just makes me stressed.
All right, well, we got two more great pieces of advice to close this out.
Think twice as fast, double the time.
I don't even know, 15, 20 houses and a bunch of commercial real estate as well. How is that not greed? Because I don't own anything. I'm a Christian. And that means God owns it, and I'm managing it for him. So I guess you're calling God greedy now.
Okay, so devil's advocate, what would you say if Greg was like, well, Dave, why do you need so many houses? Why don't you just give all that extra money away?
I'm managing money for God. That's my job.
What do you reckon?
I'm not even going to start.
Don't call God greedy.
I'm not even going to start. So for context, that's Dave Ramsey.
Dave Ramsey, yeah.
Who gives financial advice to everyone and is incredibly wealthy.
Yeah. I mean, he's been great. Of
course,
giving
net
financial
positive,
advice.
net positive to society. But that for me, that's too far.
That is too far.
Yeah. Just admit it. That you're wealthy and you have houses.
Yeah.
And there's nothing wrong with that.
Dude, it sounds like you're calling God greedy.
Oh, that's...
All right, last one.
Wow.
I don't know if a lot of you know this. I'll be worth $100 million in the next 8 months before I turn 22 years old. And you're probably saying, Gavin, that's bullshit. I'll be worth $1 billion in the next 4 years. And it's not just me saying I'm going to come up with this company. It's a mathematical certainty. As long as everything happens in the crypto market like it's supposed to, you're saying, okay, what is it? What play do you have? Do you have some Bitcoin? No. There's something called ENS domain names. And it's basically .com names, but for the blockchain. So even if you don't know what crypto is, you know what a .com name is. Okay, how much is Amazon.com worth today? Billions of dollars? So what do I have in ENS? I have all the good names. I have all the names in other languages. We can talk about that on another day. But I am an ENS whale. I own some of the best names in Ethereum name service. So mathematically, as long as first off they stay where they're at and just go up a little bit in the next year, I'll be worth over $100 million.
Nice. At least he has a strategy.
I guess so.
There's a basis to this other than let's be creative and give people offers of $5,000. This is a tried and tested way of making money.
Buying domain names.
Yeah. Would have loved for him to go a little bit deeper. Perhaps it's in the next episode, like he said, where he actually talks about the domain names that he's got.
But the thing is, he's not buying domain names.
No, he's buying ENS. Yeah. Which maybe down the track could be worth something, but I don't know enough about the space.
Maybe.
But what's with the video of skateboarding?
You really don't see a lot online, do you?
No. Is it just to keep people engaged?
Yeah, because someone talking isn't visually stimulating enough. Now a lot of videos will have someone gaming in the bottom half because
that is wild.
Keeps people's attention.
That is wild. And you're just watching someone game and listening to him talk about becoming a millionaire.
Yeah.
Wow. I'm glad I'm not into all of this.
Well, that is some business
shit out there.
There is some shit out there. That's some good business advice for Bryce. He's going to take that away. Take Harriet on a date to our next podcast recording.
Harriet on a date. Be more creative. Listen to things on 2 times so I can start thinking in 2 times.
Yeah.
Increase the sensitivity of my mouse and start trading ENS names on crypto exchanges.
So if you want more, head over to our Instagram every Friday. We're sharing videos like this. But Bryce, let's take a break here. And on the other side, we're back with another episode of Pimp My Portfolio. Some sensible financial advice. Matt Ingram from Northhaven is going to be joining us to look at the portfolio of a member of the Equity Mates community.
Welcome back to Equity Mates. It is time for
Pimp My Portfolio. Pimp My Portfolio.
We have a listener on the line who has submitted their portfolio for our expert to have a look at and review and give them some thoughts on how they might be able to improve. We would love to welcome to Equity Mates Brad. Brad, how are you?
Good, thanks, guys. How are you?
Thank you for submitting the portfolio. And in the studio, we have our financial advisor expert, Matt. Matt, how are you going?
Yeah, good. Great to be here.
Matt is from Northhaven and is part of our advisor network. So, Ren, do you want to take us through Brad's portfolio?
Yeah. So, Brad's got a couple of ETFs and a few stocks and then some crypto. So, we'll start with the ETFs, which make up the bulk of the portfolio. He's got an Aussie shares fund, which is about 70% of the portfolio, then VDHG and VGS, taking it to a bit over 75%. Then we've got some individual names, Insurance Australia Group, Antipa Minerals, QXO, NVIDIA, AMD, Catapult, and Telstra. And then to close it out, some Bitcoin and Ethereum and a small allocation to meme coins as well. So, Matt, we like to start with a bit of a nickname. So what have you got for us today?
So this one with the large Australian allocation, I'll be quoting Daryl Kerrigan from The Castle, and I'll call this one Tell him he's dreaming.
He's dreaming. Okay. All right. Well, Brad, tell us Tell us a bit about how this portfolio came to be.
I'm gutted. I thought I'd have a better nickname than that.
No, I don't say that in a nasty way at all. I'm purely, it's just a tie to the Aussie stocks. But yeah, tell us about it.
Well, I was going to say Scatterbrain goes to Randwick or the Sydney racetrack or something like that.
No, I think there's too much thought that's gone into this portfolio.
I wouldn't say
yeah. You're too hard on yourself.
Not once I explain it to you. So I guess early in sort of mid 2000s, I came a bit of a Buffett fan and sort of thought, don't try and buy the market. So that's when I originally got my Vanguard, the Aussie one. So was kind of lucky enough and bought that in 2008. So at the time, it seems like it was pretty good timing. And then basically set and forget that. I haven't really contributed too much to that at all. The Telstra one was a bit of one of my mates back in 2010 kind of said, it pays good dividends. You can't go wrong with it. And I bought a little bit of it and it kind of boring but frustrates me. And similar with IAG, I still kind of laugh about IAG because I was given those because I was an NRA member back in the day. And I just still don't know why. I feel like I was a member with them for like 5 minutes and all of a sudden they gave me some shares and I've just reinvested them the whole time. So I still feel like that I shouldn't have been given those, but I've got them. And then sort of for quite a few years I didn't really do much. That was the core of my portfolio and sort of more focus on mortgage and extra money into super and things like that. And then the ADHD scatterbrain sort of has kicked in recently, and that's where some of these other ones have kind of popped up recently.
Nice. Well, great. I didn't know the IAG story, so that was interesting. But I think
I still feel like they're after me.
Well, Matt, what are your initial thoughts?
Yeah, that puts a lot of context around this 70% holding in Australian shares. So if you've had that since 2008, hopefully you've done pretty well, and it's just been compounding and growing since, so that makes sense. Honestly, as soon as I saw IAG, I thought, yep, NRMA, here's another one.
Yeah, okay.
So you do see that a little bit, and yeah, look, you've got it. It's growing slowly. If you're going to have any insurance pick, then IAG is a good one. Owning an NRMA, it's one of the bigger ones, so you can stick with that. But look, obvious thing is huge allocation to Australia. So when you look through all of this, about 87 to 90% is in Australian stocks. Australia makes up about 2% of the global stock market. So, you're putting all your money into a tiny, tiny part of the market, really. 50% of that Australian shares index that you have, about 50% of that is made up of 12 companies out of 2,000 or so listed companies in Australia. So maybe just trying to diversify out of that a little bit, whether you're going international large caps. So if you're big on the index in Australia, then why not the index in the US as well, or other international stocks, but also getting some mid and small cap exposure. So it's quite easy to get exposure to some of these smaller names. Beta shares have SMLL, VanEck have QSML. The more active you can get in the smaller cap space, the better. But just thinking about some of those points to round it out, to maybe get away from such a heavy allocation to Australia.
So Matt, on that, I'm sure you've seen portfolios at Northhaven where people have quite a one consolidated line or heavy weighting towards something. For Brad in this situation, I'm sure he's got a fair bit of capital gains in that Australian shares fund if he's been holding it since the mid-2000s. How do you suggest he manages that? Do you suggest rebalance slowly over time with new allocations going to these other positions? Or do you suggest selling it, copying some of the tax and reallocating today?
I guess that depends, Brad. How actively are you contributing to this? You mentioned your mortgage before and super, you focused on that, but are you now allocating a bit of money towards this?
Just recently, but a bit of a twist, and obviously it's not, you can't give me personal advice, but yeah. I've got a company recently that has set up a trust, and so my advice has been to any future investments should go through that trust, and that's kind of thrown a bit of a spanner in the works because I know that I'm overweight in the Aussies, and it's almost like I need to start afresh again. So I guess I was thinking Well, I was hoping with the recent bloodbath, I was excited to potentially get some indexes, but today that seems to have changed again. So I feel like I've missed the boat.
No, not necessarily. I mean, it was a good jump overnight, but I mean, who knows where to from here? It's just wild at the moment. So, look, obviously going to be a big gain on that if you've had it for the last 15, 16, 17 years. If you've got other investments going on elsewhere that can round it out, then that's fine. If this is purely going to be your investment play, then, you know, that there might be a case for selling down some of that. But again, being strategic with that, you know, you got to weigh up, is the tax really worth it in the shorter term? But yeah, if you've got other investments going elsewhere, just focus on international elsewhere, and you can round it out. So your entire portfolio, not just in you know, this brokerage account, your entire portfolio can be well-rounded. It doesn't have to all be in one place.
Let's assume, though, Matt, that for those listening in this position, that that Brad is contributing sort of regularly, but not huge amounts, and there's that 70% weighting. How would you suggest a rebalance? Is it over time or is it all at once?
No, I'd say over time.
Yeah.
You don't want to take too many big bets and, you know, say, you know, I'm going to sell half my Aussie and put it into the US, and then Trump comes out with something in a week's time that blows up the US again. And it's just, you know, the Aussie market does follow the US to some extent, but yeah, you don't want to take too many big bets. Yeah, I think just slowly allocating, maybe just slow down on any allocations to the Australian shares and focus elsewhere. And things like, you know, if you're putting money into Antipa,
where'd you get that one from, Brad?
There's that prices.
I think I've got a bit of a man crush on Luke Larrative, so that might have been a tip for him.
Nice. Well, let's have a look at some of the individual positions. Do you have any thoughts on the individual stocks in Brad's portfolio, Matt?
Yeah, look, I won't comment on Antipa. That's for Luke and Bryce to battle out. But yeah, we mentioned IAG before. Telstra, yeah, I agree. Telstra is boring, but it's a good one, and they had a reasonably good result earlier this year. And so while everything in the market's been falling over the past couple of weeks, Telstra's really held its ground. So some good exposure there. Catapult, look, I remember it wasn't too long ago watching the footy and thinking, like, why are all the dudes wearing sports bras now? Like, what's going on? But when you look closer, it's all Catapult. So they're so dominant in that space. It's starting to operate a bit like a service as a software as a service business now. So a bit like WiseTech or Technology One. Like, there's some pretty wild movements in that. So when things are good, it's good. When things aren't good, it really comes down. So if you can stomach the volatility, then I think it's a great one to have, and especially since coming back a little bit, it's looking good. NVIDIA and AMD. Look, you've obviously picked a winner there with NVIDIA. Hopefully you've had it for a while, and it's you know, had some of that run. But again, taking a pretty big bet on that general semiconductor AI space by putting only two names in there. You might think about like a thematic ETF in this case, where unless you're really digging into these, a thematic like semi might make sense. NVIDIA might not run forever, but it is dominant. It might do well for a long time, but broadening that out with a thematic might make sense as well.
Nice. Well, Brad, did you have any final questions for Matt while you have the chance? Otherwise, I think there's been some good sort of points there for you.
I was curious about what someone's thoughts might be on QXO. I may have topped up that a little bit in the few recent days as well.
Well, I mean, we did that segment on him a little while ago, Brad Jacobs, who has done this roll-up play 3 or 4 times before and is now doing it again. It's early days, though. Like, I don't even know if they've made their first acquisition. They were trying to buy something and the board blocked them. So I would say it's very early days.
It did go through. It went through.
Yeah, I think it's jumped.
Yeah, okay. Did it jump on that?
It's been up and down, but yeah.
You're backing the manager more than anything. It's pretty speculative, but like, if you're willing to take the risk, you know, he's done it before.
Yep.
I think a focus on the broadening out that core before you take any big bets is probably wise.
Yeah. Love it. Well, Brad, thank you so much. We really appreciate you taking the time and submitting to Pimp My Portfolio. So I hope there's some things there that you can take away and put into place. But we really appreciate it.
Thanks, guys. Thanks for your time.
And thank you, Matt.
Yeah. Thank you.
I forgot to say thank you.
No worries.
And just a reminder that if you would like to submit to Pimp My Portfolio, head to equitymates.com/contact. All the information is there. But if you'd also like to speak with Matt or one of our other advisors, head to equitymates.com/advice. There'll be a form for you to fill in and we'll match you with the best and I guess the most appropriate advisor for you and your circumstances. So head to equitymates.com/advice.
You have been listening to an Equity Mates Media production. In the spirit of reconciliation, Equity Mates Media acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. This podcast is intended for education and entertainment purposes. Any advice is general advice only and has not taken into account your personal financial circumstances, needs, or objectives. Before acting on general advice, you should consider if it is relevant to your needs and read the relevant product disclosure statement. And if you're unsure, please speak to a financial professional. The hosts of this podcast and their guests may have positions in the companies mentioned. Equity Mates Media operates under an Australian Financial Services Licence 540697.